Good day to you, my trading friends. It is Wednesday, February 17th, 2021. Your cherry bomb trade is in for today, and we're going to get a little Home Depot, a little orange bucket, Homer bucket. Or is that what they call those things? I think that's what they call them, Homer buckets. Action going today. So, Home Depot, although it shows liquidity rank of 3 out of 4 right up there with the 3 drops, you're going to see in today's trade, which does trade through earnings, so you can call this an earnings trade, right? I think it suffers from a liquidity problem, so we're going to have to look at an alternative for those of you that might want to get filled on this trade. Though, let's be honest, there's been times when I've had lower liquidity and gotten filled, and you never know. I don't know if that's a function of paper trading or just dumb luck. But anyway, Home Depot has an IV rank of 9. You can see that above. That's why we're in debit territory spread, debit spread territory. But with that said, we've done our trade overview, so let's hop on into Thinkorswim where we do our simulated trading. Hi, everybody. My name is Neil. I'm down here in the corner. You just saw me over there on that thumbnail. And this is Option Theory, and I want to welcome you and thank you so much for joining us today. On screen here, you can see we're in Thinkorswim. We're in that gold-colored Thinkorswim, so we're in the paper money or simulated trading version. If you want to take your paper trading game and maybe then, therefore, your real trading game, I guess, to the next level, right? You're probably going to want to practice. Stick around to the end and we'll tell you exactly how you can do that here with us. But for now, just take a look at this chart. I would say you could, it's a pretty solid horizontal pattern, though as the email that we received this morning talked about whipsawing, you can see that. You can see some whipsaw action, right? Ooh. You'd have to have a pretty dang wide iron condor to have made it through this, right? So we're going to be looking at a trade that is, pretty much 50-50, right? And bullish. Though you see where we were for the outbreak of the pandemic, right? And then what a ride back up it's been, but that's been everybody, right? Are we going to stay there? Are we going to go up again? Are we going to come down again? Let's hope for, good things, because, hey, this is not a good thing for us. It's a good thing for people that we're buying. I'm talking about health-wise at this point, right? All right, let's go to the Analyze tab. Head over to Add Simulated Trade. We're going to be looking at the initial trade. The one that was sent to us is going to be in the April weeklies, April 1st weeklies, with 43 days to expiration as of today. And if you scroll down to the At the Money area here, you're going to notice that the strikes that we would be buying the 272.50 and selling the 277.50. But look at the open interest, a whole whopping 3 contracts. So, we get a $1 wide bid ask here. We got almost a $2 wide bid ask here. So I feel that that's going to give us a liquidity issue. But I could be wrong. It happens. So with that trade built, though, you can see down here we've got 1 contract here. Those are the strikes we just called out. And we're paying $2.53 to be able to make $2.47, right? So roughly risk 1 to make 1. And I kind of like I'm cool with that. So let's go ahead and understand the probabilities. Let's go to the risk profile. Make sure that your date here is set to the same date that you see here in turquoise, right here in the bottom left. And then I like to make my expected move show up just close to the edges. And I want to set this gold price slice. You may have more, you may have less. You only need 1 here. So we want to go to this little menu here, choose set slices to break even, and then choose the date. Now here we're looking at, choose the date. Choose the turquoise date. Choose 4/2, April 2nd, right? We're looking at a 47.47 at right now as of 5:52 a.m., right? We're looking at that probability of profit. Now, we have a better P50, which according to Tastyworks, let's bring that up for a second here. You can see we've got very neutral indicators here, right? So you don't want to be selling premium, so an iron condor probably isn't the way to go right now. So here, the P50 on this one is a 57% probability of being able to make half of this in the next 43 days. But to be able to make half of that, you need to get in it. And so that's why I think it's at least worth our time to explore an alternative that involves greater liquidity. So Remember this, 47% probability of profit with a 57% P50. Risk 1 to make 1. Let's go over here. Let's close this trade. Close it. Let's delete that trade. Let's go back and change it to the monthlies. Yes, it's a little more time than we'd like to, be in this trade. But hey, we're looking at the April 16th monthlies now. And if we scroll down to the at the money area here, we are looking at much greater liquidity here. Here would be 2 strikes. But the interesting thing is, right now, yes, the last price was 275.39, but the bid ask is quite a bit wider right now. Up to 279. But let's just take as we normally do, and in the money buy and an out of the money sell on the calls here, being bullish. Here we're looking at paying a little less. So I would imagine our probabilities should be worse, right? So paying 235, I mean, we could make 265. Did I get that right? Yeah. So let's go over here and take a look at the risk profile for this one. So we could lose 235, we could make 265. Our probabilities are going to look like, instead of 4740, let's get the date right here. See, we got to make sure the date's right. April 17th. April 17th. All right. And let's drag this guy. There we go. Set slices to break even at expiration. And we're looking at a 44%. So instead of 47, we're down 3%. In this case here, we could make 265. We could lose 235. So in my mind, very similar probabilities. Let's bring this back to Tastyworks here and see if we can't go ahead and get a different, get a P50. P50 is only 2% less, 55%. So knowing that earnings will be coming up, right, usually means volatility will increase. That should help us, right? And if you feel that you're bullish because the warm weather will be coming, even though I know many of those out there in the U.S. are dealing with a very cold winter. Hey, you Northern Hemisphere people, right? We're dealing with some colder weather. All right. It's up to you. Once again, this is always up to you. But I think I'm going to go with the monthly trade and risk a little less. Yes, I have lower probabilities of making the profit. I totally understand that. It's always good to understand that going into all of your trades, what your risk is and what your probabilities are. I'm going to right-click this trade, choose Confirm and Send. Here we are presented with the same thing we already said about max profit and max loss. This is defined risk, so you can sleep at night. I'm going to go ahead and hit Send and put that into my working orders. And if you've made it this far, I have a surprise bonus for you. I want to know your thoughts on this particular earnings trade. We've got when I scan on Tastyworks, looking at high volatility, this guy comes up. Now, pretty high here, right? I would say it's at its high, 52-week high here. Now, being honest, I've traded this before, and one thing that I feel like I've noticed is that the Chinese tickers, because it's a different type of economy there, can be propped up by the government pretty well. Not that we don't do that here, all right? But, despite what I'm seeing here, all the signs that say be bearish on this, because if I go over here and I throw in Baidu, and then go to the charts, we're at the top band. We're above the 70 mark here. We haven't made a cross here yet, but, it seems pretty dang high. So I'm thinking of a bearish trade as an earnings trade for this one. What do you think about as a potential for that one? What I was actually thinking was doing a long call broken wing butterfly here. Make sure we're in the right place here. And the question becomes which one to do. Do you do the Feb with 2 days left? I'm kind of curious. I kind of want to play with this just a little bit. So let's take a look here. And wow, it's okay. That one's not being sold. So what if we did Let's sell 2 of these. Let's buy 1 of these and buy 1 of these. So now we have a butterfly here. You know what? Let's change these to calls. And then let's take a risk profile look on that one. I feel like I got that wrong. Yeah, that is not the trade that I had built earlier. Yeah, not the trade I had built. Oh, I think that's why. 10. No, I'm getting this wrong here. Is that even traded? Let's try 340. I had built a different trade. Let me see this one. I do. Trade. With 2 days left, that's probably why I'm looking at that one. All right. Long call butterfly. No, that's not what I want. Thank you. How about a good old short call spread, huh? Maybe that's what we'll do. Analyze short call spread. Let's come out to the 30 delta here. We're going to sell this one. That has less liquidity. $10 wide is pretty dang wide. Not collecting the premium that I'd like, that's for sure. All right. I think we're going to take a pass on this trade because I'm just trying to wing it real fast. Don't rush into your trades, right? Go into it doing your homework. I don't have the opportunity right now to sit down and figure this one out. I should have taken a little more time, so shame on me. But if you come up with the trade that you like for this earnings buy-do opportunity, I'd love to see it in the comments below. If you could do that for me, that'd be great. I said earlier we'd talk about what we do here. What we do here is, if you're leaving now, thumbs up to you for making it this far. If you're sticking around, let me tell you a little about what we do here. We get Cherry Bomb Trade emails from Tasty Trade. There's a link in the description below. It'll take you over to their email sign-up page. They have several lists that you can sign up for. All of them are great. I signed up for all of them. But the one that you would want to probably get is the Cherry Bomb one, where they send you on a normal week 4 trade ideas, and we put those on in our simulated trading account to take the fear out of trading. Because maybe you're in this now because you realize there's an opportunity here. Maybe you're here because you're tired of having someone else invest for you. Either way, somebody out there is probably telling you, isn't that risky? Well, find out. Find out by trying. Find out by putting in the effort, pressing the buttons, clicking the sends, right? And the confirms. And you'll see what you can do. So I invite you to join us here, and I thank you so much for your time. And I hope you do eventually someday subscribe, because I look forward to seeing you again. All right, everybody. Until then, happy trading.